Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 29th of January. And starting off with the Vector, which I covered a couple of days back, making good progress with a gap through resistance at 20 pence, clearing the 200-day moving average rather nicely at 22.94 and heading towards the implied target that we had earlier in the week, or last week even, at 32 pence. But the way things are going, that looks as though it would be the minimum on the upside, maybe up towards 35 or 40, probably seems to be on the cards, given the relative ease with which the shares have held the gap and broken the 200-day line. Any dips towards the 200-day line currently regarded as a technical dip to buy into. On to a stock which I have also covered recently, but worth another reiteration, I suppose, Dev Clever, given that the market seems to be slightly divided about the merits of the company. But here we are on the bull side here with the break of, as I said before, the break of that resistance line there from November at 1.2 pence. Above that, the view was that the stock would head higher initially to the 50-day line, which is roughly where we are now, but or at least retesting that. And then after that, up to the top of a rising trend channel from October at 3 pence. Best case scenario, probably something like 4 pence actually towards the 200-day line and October resistance as soon as the end of next month, and obviously provided we remain above the 1.2 pence breakout. Sometimes the case that the big rises are ones that we follow, but in this case, just in case you think that I'm chasing something which is after the horse is bolted. In fact, Codal was covered here unbelievably on the 22nd, which was this time last week. I suppose then the shares were around the 0.05 pence area, something like that, so just around there. Bit of a dance there for the shares for the rest of last week, but always remained above the 50-day moving average at 0.04 pence, and obviously today we've had the news that has caused the stock to explode. Still looking for a best case scenario target, which previously seemed rather ambitious when we were down at 0.04, but up towards the top of that broadening triangle from August at 0.11 pence. End of day close above the 200-day line today at 0.07 would obviously inspire confidence. Situation with Metro is that probably one will have aged, waiting for the potential takeover of this company, which has been plastered all over social media and everywhere else over the recent past. But all that's happened in terms of the share price and the chart is that we've been in a consolidation, I suppose, between £2 and £2.50 since the end of September, which has been very dull indeed. A couple of false dawns on the upside, the main one in November when we headed towards £3 and filled the gap from September and then came all the way back again. Current situation is that we've once again got hopefully a real dawn rather than a false one, but a break of this triangle from November through the, I suppose, roughly the £2.10 level. While we're above £2.10, looking for a potential top of November trend channel at £2.80 again, which is obviously just retests what we saw a couple of months back on the shares. What's I suppose a little bit more positive now than before is the way that the 50-day moving average now at 201 pence is actually rising, so that may provide some forward momentum. Ideally, if you're a bit cynical about the stock, you'd want the shares to hold above December intraday resistance at £2.19. On to a stock which I'm not quite sure whether I have recovered or not, but it doesn't really matter. It's here today. And Synergen breaking out of this triangle from August. Top of the triangle there at 8 pence. We've gapped up through that. In fact, this is the second gap in a row, which is normally a very strong technical sign. We might fill one of them, but at least while we're above the 50-day moving average at 7.17 pence, looking for significant further upside. That could be as high as 20 pence, which is the top of a rising trend channel from July, which is obviously looking rather ambitious at the moment, but certainly the setup is there on a technical basis. If you're cautious on the shares, maybe you'd wait now for a decent end of day close or a week close above 8.5 pence, which was the initial January resistance for the stock. Not too many situations to look at today, so therefore I'm trying to jump the gun on one of a stock which has been one of favoured stocks here on the Bulletin Board Heroes in terms of coverage, at least, if not performance. Comes in the form of Zanega iron ore, and the reason I'm jumping the gun is because I'm assuming that the stock is going to break out of this wedge formation that's been in place since the middle of last month. An end-of-day close above 8.3 pence would be the trigger, just depending on when that actually happens. But we have a situation where there is bullish divergence in the RSI window, and with the stock so tied up in that wedge, one would expect a positive move to occur pretty soon. If it does, the target would then be towards the top of a broadening triangle from at the end of September at 14 pence. Stop loss obviously back below 7 pence at this stage. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.